So you know you've been making a lot of money in the market. You know that you've been in a bull market for a while. When you open up your portfolio and you see $4,800 today gain, and you're like, oh, that sucks. That's it? That's it? $4,800 today? Ugh. That's when you know you've been in a bull market for a while. When you aren't even getting the dopamine hits anymore off a nearly $5,000 move. When you've been used to making $10,000, $20,000, $50,000, $70,000, $100,000 a day, and you go down to $4,800, you're like, no different than in the bear markets. I don't know how many of you guys were in the bear market of 2022. It seemed like every day you would open up your portfolio, you lost money. And when you wouldn't lose like that much money, that was like a victory day. You're like, yes, right? Oh man, you gotta love the emotions that as a human, you can kind of go through over time with, money up and money down, right? 3 stocks we're going to speak about in this video here today that are a buy this week. All 3 of these stocks are giving great discounts. All 3 have tremendous upside ahead. So we're going to go through all 3 of these stocks at the front of this video because, they're all giving great discounts, which, by the way, speaking about great discounts, we are a little over 2 days away from the massive Black Friday sale for 1000xstocks.com. So those of you that have not gotten on the email list or text list yet to receive that one-day deal, do so now. That will be pinned comment down there, okay? Then we're going to react to 3 videos in this video here today, okay? First one up here, market rally can last as evidenced by Tuesday's intraday rally. SoFi's Liz Young. Looking forward to hearing her perspective and sharing my perspective on that. Markets have positive momentum as now is not the time to reduce risk. We'll talk about when it is the time to reduce risk. And then I want to react to this video. This one was actually from yesterday. Tom Lee speaking about where he expects the stock market to head from here. So always looking forward to reacting to Mr. Tom Lee. One thing only I need from you guys, and you're underperforming right now. I gotta be honest, you're underperforming. We're not hitting 10% like ratio on the videos. We gotta get to that 10%. Gotta get to that 10%, okay? So all you guys that think you're too good to hit the like button, please hit that like button. We got to get to our 10% ratio. No one's too good. It motivates me. Listen, I didn't get enough likes as a kid. So now as a 35-year-old man, I need all the likes I can get, okay? I appreciate y'all for being here, and I appreciate everybody that does hit that like button. We got to get to that 10% ratio, baby, okay? All right, guys. First stock, these 3 stocks that it's a buy this week is Celsius Holdings. I call it Celsius Beverage. Ticker symbol CELH on this one. $27 stock here today. Obviously a stock that's had a tremendous past 5 years. Stock's up 2,200%. Now this is kind of a 2-for-1 buy here because the way I look at buying Celsius, I also want to minor buy Monster Energy, and that's what I'm doing in the public count right now. So basically, I'm kind of putting in roughly around $2 for Celsius, and then I'll put in $1 for Monster, essentially, okay? And the reason I'm doing that is as a hedge play, right? Monster's phenomenal at competing against anybody in the energy drink space. They've done such a great job over time, right? And, look at this. If you don't know, Monster owns Rain Energy, and somebody in my private stock group posted these pictures here a day or two ago at their local, I believe it was CVS. And it's just amazing seeing Celsius and Rain right next to each other. These new Rain cans they have, they literally are like splitting image of each other. They're splitting an image of each other. And Rain actually did a lot of damage. Basically, Monster came out with the Rain brand back when Bang Energy was huge. But now, Monster owns Bang Energy. They bought out Bang Energy, so the Rain brand doesn't really need to compete with Bang Energy anymore. Now they're starting to position the Rain brand to compete directly with Celsius, which, isn't the most fun in the world because Monster's vicious. And you got to understand, some people know the difference between Celsius and Rain. A lot of people won't, though. That's the thing you got to understand about that, right? Now, you understand with Celsius, there's tons of expansion opportunity outside the United States still. This is a private stock group member posted this a couple days ago. Walmart, Burlington, Canada doesn't even stock it. They were showing the energy drink section. They don't even have Celsius there. So there's still so much expansion opportunity for the Celsius brand outside of the USA. It's incredible, right? And you also got to keep in mind Celsius is going to have some incredibly easy comps next year to comp against. Now, there's also, you can't really debate this in regards to Celsius. The product moves. There's no debating that, right? I mean, the product moves. You look at basically any store, and they just move Celsius. I mean, the shelves can be full. 2 days later, 3 days later, they're just like, there's no product left. It's incredible how well Celsius sells overall, right? Now, as far as the stock price goes, it's doing exactly what I knew it was due, right? This is exactly what I've been telling you guys on the main channel and here on the reaction channel. stock was going to face a lot of tax loss harvesting in the year end. It's exactly what we see playing out, right? And I kept telling you guys in regards to Celsius, don't trust any short-term rallies, right? Celsius is positioning great for the next, I would say, 3 or 4 years as a stock, but don't trust any short-term rallies. So you see the stock all of a sudden pop 5-10%. People get real excited. I'm like, don't get excited. It's going to sell that right back off. And that's exactly what it does. Celsius will rally and it sells right back off. And the reason being is no one's made money in the stock for really the past 2 years. And a lot of people are down huge on it. Imagine buying Celsius at $70 a share, $80 a share, $90 a share. It's in the 20s right now, right? So it's an easy stock to tax loss harvest here into year end. That's what you see playing out. So people can write that off against gains. And so that's basically what you have. But as a long-term investor, I look at this as a great opportunity to buy, right? All these people tax loss harvesting the stock, selling it off at joke prices. I'll pick up your Celsius shares at $20-something. I'll be happy to take those shares off your hands, right? And if they ever want to sell it under 20, I'll take those shares as well. It's a really hard stock to get under 20. It's even really hard to get it under 25. But the moral of the story is give me as many shares as you can in the 20s right now. And I'll also buy Monster along with it as a hedge play, just in case Monster destroys Celsius over the next few years, which I don't think is going to play out. But if it does, then Monster is going to have even a much more dominant market share in the energy drink category. Okay. Second stock up here that is a buy this week is AMD, Advanced Micro Devices. Oh man, yeah, people are calling it Advanced Money Destroyer because the stock's done so poorly compared to Nvidia and also so poorly compared to a lot of big tech stocks. You look at this year down 4.5%, but as a brand new buyer to this stock, right? I literally just bought my first shares just a few days ago. I don't know if you guys saw this video on the main channel I did. My main channel is called Financial Education, right? It has a few more subscribers than the reaction channel does, but it's okay. It's okay. But I did a video a few days ago called I'm Buying a New Stock, right? And I just bought some AMD shares for the first time ever. So I look at this as a phenomenal opportunity to buy AMD shares over the next few months here. And I don't believe it's going to be Advanced Money Destroyer over the next 3 or 4 years. I believe this is going to be Advanced Money Maker over the next 3 or 4 years, right? Now, AMD has a lot going on here, right? AMD teams up with Taiwan Semi, TSMC, the massive giant, to take on Samsung in the smartphone market. Advanced Micro Devices reportedly plans to enter the mobile device market with new accelerated processing unit, APU chips, designed for smartphones. The chips will leverage Taiwan Semiconductor Manufacturing 3-nanometer process, extending Taiwan Semiconductor's order visibility for 3-nanometer production into late 2026. The new APU chips are rumored to target flagship smartphones, potentially being used in models from Samsung Electronics, which is interesting, right? Because the article kind of almost frames it like they're going against Samsung, but then they're talking about, they might be used in Samsungs. So the moral of the story is here, AMD's, not even really seen as any sort of major player at all in mobile phones, right? But there's a potential that if we look out 5-10 years from now, maybe AMD does become a big player in the smartphone market. And that's just upside I don't think a lot of people are even talking about or considering right now, right? Because it's not something that's changing AMD numbers in the short term. Now, additionally, if you look at their latest quarter, they had 18% revenue growth. Now they're talking about 22% growth in this upcoming quarter. That's an acceleration. So basically, AMD growth rates keep accelerating and are likely going to keep accelerating for at least probably the next 1 to 2 years in terms of accelerating quarter after quarter after quarter, right? Now, also, I believe AMD did sandbag that guidance. I think they're going to come in and smash those numbers. Goldman Sachs analyst Hari credited AMD's growth, increasing capital investment in AI infrastructure driven by enterprises in an AI arms race. AMD's robust product pipeline includes competitive GPUs and the integration of ZT Systems, that's their new acquisition, positions the company for accelerated growth. Rebounding demand for server CPUs and market share gains in enterprise-targeted SKUs will likely boost revenue and margins. So AMD's got a very exciting story on several fronts here. And, because we're talking about data center revenue that should continue to skyrocket for several years out, right? We're talking about them getting into the smartphone space, which, that's just a call option on AMD is the way I would look at it. They got their new acquisition of ZT Systems going through. I think gaming's going to turn around next year. I think embedded's going to turn much higher next year as well. So this stock sets up very, very well. But once again, if you want a lot more in-depth analysis of AMD, check out this video I put out on the main channel a few days ago, and you'll get much deeper analysis there, okay? Alrighty, so the next stock up here, the third stock of these three stocks, and then we'll react to those three videos. This stock is Cheesecake Factory. Listen, Cheesecake Factory is a buy every single month, if not every single week right now. You buy shares and you buy shares and you buy shares. The stock's trading so cheap that you have to just continue to load up on shares of the stock. Looking at 1000xstocks.com here, right? Look at the incredible growth in earnings per share on a trailing 12-month basis. It's up and it's up and it's up and up. And honestly, I don't see this calming down anytime soon. Let's get a little bearish around here. I don't see that happening. I think you're going to see Cheesecake's trailing 12-month earnings per share growth go up and up and up for the next several years. I don't think this is slowing down anytime soon. If anything, it's going to speed up. Operating cash flow is continuing to climb. You ain't seen nothing yet in regards to operating cash flow at Cheesecake. Look out the next 2 or 3 years as North Italia gets more built out and Flower Child concepts. Oh my gosh, get ready for some operating cash flow. This looks like the operating income. Look at the way the operating income has moved up here. This is incredible on a trailing 12-month basis. Just unreal. And once again, this is not stopping. This is not slowing down anytime soon, in my opinion. We're going to continue to pile up operating income from this company overall. Now, if we look at projections and kind of what I expect Cake to do over the next few years, I believe 2025 through 2028, they're going to average about an 8% revenue growth number, right? Which, how do they get to that number? Add-ons. So consumer getting in a better spot 25, 26 because they're not being destroyed by inflation like they were certainly in 2022, 2023, into 2024, right? So I think liquor sales, like desserts, appetizers, I think those sorts of things will definitely be in a much better place in the next couple of years, those add-ons, right? Usually they can go up like 2 to 3% on menu prices over time, so you get part of that in there as well, right? New locations, Cheesecake Factory concept itself doesn't build out many new locations. They pretty much have most cheesecakes where you need a Cheesecake Factory. The real growth in concepts comes from North Italia and Flower Child, and a few of their other concepts as well, like Culinary Dropout, right, and Blanco. But the big dogs, or North Italia and Flower Child, those are the two that are going to expand rapidly over this next 5 to 7 years. You're going to see in just about multiple locations in every big city out there, right? So new locations is also how they get there. And then delivery. They still got a lot of room for expansion delivery. Right now, they're pretty much only have an exclusive partnership with DoorDash. I wouldn't be surprised if over time they have DoorDash, they also have Uber Eats and Grubhub and all the other ones you want to own. So delivery is a huge opportunity, and especially for the Flower Child concept. Keep that in mind. That concept's got a huge potential in regards to delivery, right? Now, net income growth is going to be exceptional next year. They're going to be at like a 22% rate, but I don't think that's going to last. I think it's going to go down to 16% in 2026, 15% in 2027, and then 14% in 2028, right? Which gets their net income margins to hit 5% for the first time in 2028, right? And gets their revenue to about $6 billion in 2028. Now, for a restaurant chain growing revenue at 8%, I think a 20 to 25 P is very fair for the stock, which gives me a compound annual growth rate over the next few years of 22% on the low end, 29% on the high end, and Cheesecake does pay out, I believe the dividend yields well over 3%. So we can add, extra dividend money on top of that. That's just a tremendous, tremendous opportunity here in regards to Cheesecake Factory. So yeah, I like this one a whole dang lot. Now, in regards to stock like Cheesecake, for those of you guys that are going to get that 1000xstocks.com deal, the search feature, compare feature, being able to compare 3 stocks, earnings call, SEC filings, projections, financials, all that's cool. But the education portion right here, for a lot of you guys that aren't super educated on how to value these sorts of stocks like a Cheesecake Factory, dividend stocks, I want you to really pay attention to these 2 sections right here. These are almost like course material, but in written form. How to value a dividend stock, that one's going to help you out tremendously. And this one right here, Dividend Investing 101, is going to help you out tremendously. For those of you guys that are trying to figure out how do you value a stock like an AMD, for instance, right, or a Celsius, for that, what you want to do is how to value a growth stock. That's going to be very important for you. For like Celsius, I think this one would be very important to pay attention to. How to perform SWOT analysis, strengths, weaknesses, opportunities, and threats of a company. Very, very important in regards to that, okay? Now, if you also look here, AMD, Celsius, and Cake, guess what that does? That's my investing blueprint right there. GVD, right? GVD 1, 2, 3. Growth, value, dividends. I got growth stock in AMD, right? A company that's going to be growing revenues well over 20% for the next several years, right? Celsius is more of a value play, right? And then Cheesecake Factory is more of a dividend play. So I got my GVD in there in regards to all 3 of these buys here. So incredible opportunities there. And if you ask me, which of these 3 stocks do I want to buy them? Ask me this question. Which of these stocks is the most slam dunk, in my opinion? The most slam dunk of those three stocks, in my personal opinion, would be Cake. If you ask me which one has the biggest reward potential over the next 3 or 4 years of those three, I would say Celsius. If you ask me which one's the riskiest of those three, I would say Celsius. If you ask me what's probably, the most attractive risk reward profile of those three, I might have to, AMD does have a very attractive risk reward profile. I got to be honest with you guys. It'd be between them and Cake. AMD does have very attractive. No, AMD might be a little bit bigger focus for me personally. And the reason being is AMD is a brand new position for me. So I need to get that baby built out ASAP. And when I say ASAP, I mean I don't think I have all the time in the world. I think I got maybe 2 or 3 months to really build out a nice size AMD position before that one starts to go beast. But we'll see. I hope I'm wrong about that. I hope I have more toward 6 or 12 months to build out an AMD position, but I don't think I do. I think I got maybe 2-3 months. All right, let's react to some videos.
Another Trump administration with talk of tariffs and tax cuts and so much more for investors to consider. On that note, let's bring in Liz Young-Thomas, SoFi's head of investment strategy, with me here at Post Nice. Good to see you.
Good to see you, too.
I'm just going to remind you, we'll break away and go to the White House if we see the president.
I hope she's got some SoFi options that she was granted over time and still holds them. Woo-wee.
But how you're thinking about the market today, which is doing a pretty darn good job brushing off news of more tariffs, at least what the president-elect is talking about.
Yeah, I mean, if you tuned in right now, you'd look at this and say it's kind of a boring day, flattish to up. But knowing the news that we came into the morning with, knowing that the market was down and volatile earlier in the day, and then seeing where it is now, I think is just further proof that this has been a rally of sentiment. This has been a rally that can last, and people want reasons to buy. And there continues to be a bid for a lot of different sectors, many sectors now almost in overbought territory, but almost brushing that off as well. So it doesn't really matter if they're in overbought territory. People still have appetite to buy equities. So the tariff talk today, I think what we're going to continue hearing is a lot of severity in the proposals, but then softening in the execution when it actually happens. And I think that's part of why the market is brushing this off. Also, even if the China tariffs do go into effect, these are not a surprise. This is almost exactly what most people expected. And perhaps they go into effect immediately when Trump gets inaugurated. But again, not a surprise.
I was going to say to you.
So listen. In regards to this whole tariff situation, she is 100% on the ball when it comes to that. And that's why the market's not freaking out, right? You heard about the news. Trump's talking about 25% tariffs on everything coming from Canada, everything coming from Mexico, right? If you're going to throw out a lot of threats, you want to do it when you're not in office, right? Because it gets, other countries thinking, ooh, is he serious? What should we do? What should we do to counter this? You start coming to the negotiation table, right? That's Trump's playbook 101. Right? That's Trump's playbook 101. So that's why the market's not freaking out over that. Is it possible Trump does those sorts of tariffs? That's potential. But there's a potential, there's a lot of negotiations that end up transpiring, going on, that it never ends up being like that. Or maybe it's a 25% tariff, but it's only on a few items that come from Canada or a few items that come from Mexico, right? So that's why the market doesn't flip out over that and knows kind of Trump's game. We've seen Trump in office before. So the market knows the games Trump plays, and that is what that is, right?
We've sort of seen this movie before.
Correct.
Exactly.
None of
That's a
this
good way of
comes
putting it.
as a
Seen this movie
surprise.
before.
President-elect Trump campaigned on this, and the market was going up knowing full well that tariffs were likely anyway. Whether this is the first salvo in a prolonged negotiation,
that's right,
we'll find out. But the market certainly doesn't seem to be too concerned about that. On the note that you said about, so many different sectors have seen gains, if not record highs, right? Bank of America Securities today talks about the highest inflows that they've seen since September, that clients bought stocks in 9 of 11 sectors, led by comm services, tech, financials, and discretionary. Others are talking about a huge move higher in cyclical names. That was Savita at Bank of America today as well. Is that the kind of thing that we should continue to look for, those areas of the market to do the best?
I think that 2025 will end up being a positive year, but more muted returns broadly and not as concentrated as what we've seen for the last 2 years.
Why do you say more muted returns? If there's all this optimism about, a pickup in growth, using the pickup in growth to get at the deficit. You increase oil production. I mean, I'm just saying what the expected policies and things that will be championed by a new Treasury Secretary are going to be. If there's a lot of optimism about that, why are gains muted?
Yeah. So for one thing, we came into 2024, and this is a question that I asked myself thinking about writing the 2025 outlook, right? Can we have another 2024? And what's different about coming into this year than what was different about last year? We came into 2024 with the expectation of 6 to 7 cuts by the Fed. We're going to end up with maybe 4, and right now 2 more priced in. 2 more priced in for 2025. So less monetary loosening, right? Less wind at the back from that perspective. We also are coming into it with valuations at a higher level, but not just in certain sectors. They've gone up, as we've already discussed, across a number of sectors because of all of the appetite for buying. So there just isn't quite as much room. And when you look at things like valuations, now they're a terrible timing mechanism, but there's something that you have to look at over the long term.
So, you know what's interesting? Did you guys see what I saw in regards to the market today? Let me show you something very, very interesting. Oh, yeah. I'm going to show you guys something very interesting here, okay? So, let's go ahead and let's look at the Russell 2000 today. So, look at the Russell 2000, down 0.7%, right? But then, look at this. Look at big tech today. It is a lot of the playbook of, let's call it the first half of 24 and 2023, when you saw the small caps not really doing much, but you saw tech moving up, right? And that's exactly what you saw play out today, right? A lot of the traditional big tech companies you would think move up. Look at Meta today, up about 1.5%. Look at Amazon today, up 3+%. And it's one of the other reasons I love the way I'm positioned in the market right now. I love the way I'm positioned because if small caps have a banger day and big tech does nothing, right? Big tech's just flat or it's down slightly, but all the small caps are rolling. That really benefits me huge because a lot of my stocks will be up 4, 5, 6, 7, 8% on that particular day, like massive moves, right? Then let's say we get a day like today where big tech is rolling, right? But the Russell stocks are not doing a thing and they're down quite a bit. I can still make money on a day like today. So I'm kind of getting the best of both worlds in regards to this, right? Where I also have a hedge on in the market. So if the whole market goes down, then I also have a hedge that should print money in that scenario as well. But which, once again, I just love the way I'm positioned in this market right now. Already, markets have positive momentum, and now is the time to reduce risk. And I still got a good amount of cash on the sideline. So even if we had a downtrending market, my hedge will print money. And then additionally, I got a good amount of cash to plug into the market, right? So I love the way I'm positioned. That's why I'm just staying on sides in regards to this. I'm not going too crazy with buys or FOMOing in, those sorts of things.
A lot of positive momentum, and now...
But I'm buying stocks every week. Every week I buy in the public account. Every week I buy in the Patreon portfolio. Every week I buy in my private portfolio. Every week.
Not the time to reduce risk. It's also not the time to be a contrarian. For more on where he's finding some opportunities right now, I'm joined by Matt Orton, the chief market strategist over at Raymond James Investment Management. This is a very interesting thesis. It's not at all uncommon for people to say momentum begets more momentum, especially to the upside. But what about all those valuation concerns? What about tariff concerns? What about the uncertainty and the wall of worry? Are we still going to climb it?
Hey, Dom, always great to join you. And I do think we're going to continue to climb the wall of worry. I actually think having a wall of worry is probably a good thing for the market to overcome and to have, because it means that there isn't just universal positive sentiment throughout the entire market. And I think when you look at where we are right now, we've got very positive fundamentals. There are known unknowns. We know that there's going to be tariffs. There's questions with respect to how they're going to be implemented. There's geopolitical concerns, but there's questions around how they might ultimately resolve. And I think we're going to figure a lot of that out as we move into 2025. But for the rest of this year, we're coming off of a good earnings season where expectations for 2025 remain positive. You've had really strong corporate profit margin, which makes me feel a little bit better about where we are with respect to valuations. And one of the things I tell our clients a lot when they ask about, isn't the market very expensive? The average stock is not expensive when you look historically. There's a number of names, the Mag 7 included, that have gotten pricey, but there's a lot of parts of the market that aren't, particularly when you look down market cap, those companies who are more exposed to the U.S. economy, small caps. That's an area of the market I like a lot because...
Yeah, but I also don't want people thinking like there's not opportunities in some of those big tech names, because that's the feeling a lot of these individuals can kind of give off. It's like there's no opportunities in big tech, like they're all overvalued. That's not true. That's not true. NVIDIA is still a hard stock to make a case that it's overvalued. NVIDIA, you can look at it either two ways. It's either undervalued right now or it's fair value. You can't make an argument that stock's overvalued. The numbers are too damn good. And if you look at the forward P, given the growth rates the company has, even if those slow substantially, you can make an argument that the stock's undervalued. Meta is insanely undervalued right now. It's a steal deal. Google, they have a lot going on with the government, so I understand that some people not wanting to touch that right now. But the fact is, given the growth rates, given that forward P, it's undervalued right now, right? AMD, I know they don't get put in that big tech category because it's only like a $200 billion market cap, which, many of those other companies are $1 trillion plus. That's undervalued right now. Right? I actually think Microsoft's valuation is very fair right now. Fair to undervalued on Microsoft right now. So, you go through the list, Amazon's undervalued right now, which you saw that stock outperforms tremendously. Keep in mind, Amazon, the only thing that's really held back, I think Amazon would easily be trading 250, 275 right now. But Jeff Bezos has put a lot of selling pressure on Amazon this year, which, has, in my opinion, held back the stock because he's such a massive shareholder. And so when he puts that selling pressure on it, it's a lot, right? Because he wants to fund his rocket company and all those other things he's doing, right? But outside of that, I'm looking at a lot of big techs, and I don't think the valuations are too bad there, right? Apple, you can make an argument that that's trading a little rich. Okay. Tesla, you can make an argument that that's, trading rich. Tesla always trades rich. Get used to it. It's never not going to. It's just going to be a question of how rich does Tesla trade? Is it at a 50 forward P or a 70 forward P or 110 forward P? That's the only question in regards to Tesla, right? So, yeah.
Still very cheap relative to large caps, and you're seeing an inflection point with respect to earnings, and I think that will sustain them moving forward for the rest of this year and well into 2025.
All right, so that small cap story is also predicated on this idea that lower interest rates do matter. At the same time, we've got a cross current of a stronger U.S. dollar on a general basis with regard to some of the policies that we're talking about. All of these things make for a very mixed picture. And by the way, a strong dollar also means rougher profits for large multinationals. I'm trying to figure out where you exactly, beyond small caps, that you see some kind of opportunity there. Is it still going to be in many of those larger cap tech names?
Dom, it all comes down to selectivity. So that's why moving forward, I think as we go into next year, it's going to be more important what you own. The rising tide isn't going to lift all boats. And that's why I think a lot of the divergences that we've seen this year, where financials are so dramatically outperforming, where only some of the Magnificent Seven and mega cap tech names are actually outperforming, those trends are going to continue because it's supported by the companies that can weather a lot of those headwinds really well into next year. So financials, for example, particularly banks and capital market companies, I think those look particularly attractive because they're less exposed to a lot of those themes. They're more exposed to cyclicality and the strength of the underlying economy here, and the fact that we're going to go through a deregulation phase where that's going to lead to more deal activity coming through, hitting the bottom lines, and a steeper yield curve certainly doesn't hurt. And across the board, higher quality companies have less debt maturity cliffs coming up, so you don't need to worry about the impact of interest rates on some of those companies as much as you would think. Even further down market cap, that's why I emphasize to clients, look for companies that have good free cash flow, growing free cash flow, profit margins, return on equity. All of that's going to help insulate you from some of the issues of rising rates, perhaps in increasing U.S. dollar. So there's ways that you can get around those themes by being very selective in the market, and I think that's going to be very critical moving into next year.
So a lot of good points by that gentleman there at the end. All right, Tom Lee, everybody's favorite bull.
And a CNBC contributor, Tom, great to have you.
Good morning.
Happy Thanksgiving in advance. You do write about some clearing events that we've gotten through, right?
Yes.
Is clearly best into Treasury, and then NVIDIA's earnings, too, kind of remove some uncertainty?
Yes, and we could tell the market was sort of holding their breath on both, because once NVIDIA reported, the markets began to level.
Four reason case for Thanksgiving rally. Treasury Secretary announcement removes uncertainty. Even Fed slowing cuts still dovish. Yeah, that's true. NVIDIA results, because, here's the deal, okay? listen. If the Fed had to cut rates rapidly, right, that would be seen as a huge risk to the market. Because if the Fed had to cut rates rapidly, what's going on? A massive recession's going on. There's fear about economic panic, right? Like that would be a bad situation. So I agree with him. Like the bottom line is the Fed's moving rates lower here for this next bit of time. Where is the Fed going 2 years from now, 3 years from now, 4 years from now? Debatable. Where's the Fed going over the next 12 months? Not debatable. Lower. So for that reason, I agree with him. Still dovish, right? And once again, you don't really want the Fed going down like crazy because that means you're in a complete collapse of the economy, right? NVIDIA results are a clearing event. True. Markets pulled back to technical support. No real comment there.
And of course, we're seeing the market reaction today to Treasury Secretary. These are all both good events, but also showing you there's been a lot of cash on the sidelines, which is why we're rallying.
$7 trillion plus.
Although making a pretty good yield, I imagine. What's the impetus to leave those sidelines if rates can hold these levels overall?
Well, I think one thing we have to keep in mind is there's $7 trillion of cash on the sidelines, which I think in general portfolios are overweighted and risk-free. And I don't know if it's going to be 5% 2 years from now. So I think investors, as they're planning ahead and they're seeing an economy that's resilient, I think the case for equities is still very strong right now.
Have you done any work on earnings for next year or the year after?
We're actually working on it now. Our outlook comes out December 12th.
All right. So we'll check back with you then.
Yeah.
Meanwhile, what sectors do you favor at this point?
Well, I think the template that we think makes sense is buy things that either benefit from a dovish Fed or a Trump White House, which is small caps, cyclicals like the financials, the regional banks and industrials, and of course crypto, especially Bitcoin and some of the proxies like MicroStrategy and Semler Scientific.
But did you hear what we were just talking about? Can the Trump administration get away with the pro-growth policies and a dovish Fed at the same time? Because some of them work against the Fed being able to cut rates.
Yeah. I mean, I'd say the market is very skeptical at the moment. That's what we're hearing from our clients. But that also means that's room for positive surprise. And I think one thing to be mindful of is the Fed can be dovish even if there's...
I already know it. Next time Bitcoin crashes, whenever that is, they're going to change its name to Microtragedy. You already know it.
As long as inflationary pressures and expectations remain intact. And so far, that's been the case.
Has it, though? We're seeing a little bit firmer core readings on inflation, and I guess it depends on what he does with tariffs.
Yeah, but if you look at survey expectations, whether the Federal Reserve Survey or UMich, we're seeing 5, even 6-year lows on inflation expectations. So we're back to pre-pandemic levels for what consumers see. And then if oil falls, as you know, that sort of pushes down the inflation forward curve.
On the 1 year expectations, right?
Yeah.
Fives have not been as well behaved.
That's right. And, those surveys are notoriously a little funky because if you look at the range of answers and the actual data, some people put 1,000% as the survey answers. So they can tend to skew the actual medians.
Right. Meantime, there is this school of thought that commodities are not suggesting rampant inflation or a return to a double-top CPI. You got Europe increasingly exporting disinflationary narratives, certainly China.
Yes,
right?
That's right. And I think there are many people who thought inflation would pick up because of tariffs. But as you know, it's not clear really what ends up being implemented. And if we get milder tariffs, that's actually less inflationary pressures.
Page 1 of the Times over the weekend was about companies elbowing each other to get in front of the president-elect to make their case to be carved out of tariffs.
Yes.
And then this morning, Reuters has a piece on the farm industry, again, looking to be exempted from deportationary efforts. How much policy risk do you think is going to be embedded in the next year at least?
Well, I think this is what investors are concerned about because we know that there was a campaign that was run on tariffs and deportations, but as you know, those can be very harmful to the economy. So I think that having the right cabinet picks can actually get us into sort of the right blend of sort of outcomes. And I think that's what the market's starting to price in.
Meaning you've been impressed with the picks so far?
Yes, I think not only have I been impressed, but we can tell from our client feedback that the market's really like this.
Alrighty, folks, it's almost time for the big 1000xstocks.com sale. So this is access to our entire search feature with mandatory metrics. I set up everything exactly how I want it in regards to how the P metrics work, trailing 12-month P, followed by forward P, followed by 2-year forward P, followed by trailing 12-month earnings per share growth, current year, next year. Everything's laid out exactly the way I want it to. Advanced metrics such as 2-year stack expected earnings per share growth of companies, 2-year stack expected revenue growth for companies, PEG ratio, return on equity, price to book, price to free cash flow yield, dividend yield, all that good stuff, right? And then we have our compare feature, which is one of my favorite features because you always got a finite amount of money, so you got to figure out what stock do I like best, right? So let's say I was figuring out big tech. I might go, okay, I want to figure out what's a better buy here, Apple or Microsoft, or what about Meta? And this is something that used to take me an hour to do all these different metrics and compare 3 companies versus each other. Woo! That was less than 2 seconds. Less than 2 seconds, and I just accomplished what it used to take me an hour to do to compare 3 companies versus each other on all these different metrics because I have to go back and forth and then, okay, this one's at this number, okay, this one's at this. Oh my gosh. Now I can compare 3 stocks in 2 seconds. You got to be flipping my flapjacks. We have our earnings call feature, SEC filings, projections, which is one of my favorite. This is probably my favorite thing personally on all of 1000xstocks.com, being able to plug in numbers and run, valuation models on where I think a company should be valued over time, and then it's spitting me out what my compounding annual growth rate is, and I do that for a base case, bear case, ultra bear case, bull case, and ultra bull case for all my different stocks. We have our financials with financials and our beautiful charts feature that we just continue to add to. That's our newest toy, which I absolutely love our charts feature. And then we have our metrics, which are going to tell you exactly the definitions of all these different metrics and going to give you, real world examples of everything. So if you're a newer investor in your first year or two and you don't understand a lot of this terminology we're using on the site, we have access to that, right? And lastly, the last thing I actually want to show you guys here is our education section. And this is going to help out so many of you guys that are in your first year or two of investing. 1000x education. Oh my gosh, this is going to help you out. These sorts of documents are just incredibly valuable to explain exactly, let's say you don't really understand a balance sheet well, to explain exactly how a balance sheet works. Real world example, look at how in-depth these documents are. And we have that for all these different subjects. So once again, pin comment down there if you're looking to access that deal when it does drop. And that's not too long from now. It's only a couple days from now, right? Pin comment. And once again, you'll likely want to not only enter in your name and your email, but I would probably do your phone number as well, so that way that you can receive the deal via text and not just email, because your inbox is going to be flooded on Black Friday with so many different offers from companies that you don't even care about, and you don't want to miss the 1000x sale, right? All right, guys, much love and have a great day.